Hi, this is Joseph Gillette with Venture Capital Cross, and today I wanted to do a quick video on when is the right time to buy companies before they go public. What is the Goldilocks zone between not too hot and not too cold, meaning that you don't have to wait too long or not enough time to wait for a good return? And there's no 100% answer because also it depends on your strategy. It depends how patient you are. Many venture funds will buy and hold for 10 years, and they call it the runway. But definitely, I can tell you when not to buy it, and that's right before the IPO. So there's this thing in private markets they call pre IPO, which is a very misleading term. Some people believe that you can buy a company before the IPO and sort of like flip it like you would a house. And at the IPO, you're going to be able to have a profit. And that almost never works out. It happened a couple times in a handful of cases years ago, more than 5 years ago. So people think that because it happened a few times that it always happens. But the reality is when you do an IPO and you have underwriters and you have this whole process, they price it so good that if you buy it 6 months or a year before the IPO, you'll probably even lose money if unless you hold it for at least a year or two after the IPO. So if you're buying pre-IPO, it's not necessarily a bad thing if you're bullish on that company and you're going to invest in it and sit on it. But don't expect to be able to sell it right at the IPO or right the very day that the lockup expires. You're probably going to lose money or break even if you're lucky, but you're not going to make a bundle because public markets are just atrocious when it comes to pricing issues. You've got all kinds of different variables going on, but you're out there in the open. When you're private, no one can really criticize you. So that's not the right time to buy, unless you do plan on holding for several years after the IPO. So when is the right time? Some people say Series A. Some people say it's the Series C through D, E, that range. And that's basically your growth mode where you're well before IPO. Basically, you want to buy a successful company when the IPO is not even on the table. So it's private, it's a unicorn, it's growing, but you want to buy it when they're not even discussing IPO because by the time that the discussion hits the board table, it's going to be probably too late for that company. And then you have cases like Epic Games and SpaceX where they may never go public or it may be just an unknown date in the future. So what's the right time? You have to look at each company individually. There's not a magic formula exactly. It's the Series A, it's the Series B. It's probably not angel or seed rounds because that's too early. At that stage, you don't know if a company is going to prove itself yet. So I would say the earliest to invest if you're looking for a solid company that at least has proven itself, you want to do it at least Series B to C. And the less patient you are, the later rounds you can invest in. So as you go down the alphabet, rounds are uh, counted like letters. So if a company has a seed round, the next round is probably going to be a Series A, and then it's going to be Series B, C, D, and then on through down the alphabet. SpaceX is already down to, I think, P. N was a few years ago. So that's my take on that. And of course, we're going to do more videos on this because this is not something that you can just, there's not a formula. Everyone has a different opinion. Different strategies would say that the answer is going to be different, but it depends on a lot of variables. It depends on market conditions. It depends on the sector. Some sectors like software typically trades at a much higher multiple than other sectors because of scalability or perceived scalability because you can replicate software because it's electronic and digital easier than you can physical things, for example. So all these things need to be considered. And that's part of the magic of private markets. You want to find that niche that fits your investment portfolio. And that can be done only by homework or someone that really knows what they're doing and grinding the numbers and seeing what works for you. But the goal of Venture Capital Cross is to create a cloud platform where you can get everything that you need for your private market deals, whether that's secondaries, early stage deals, or training and education, which is what we're doing with these videos. So we hope to see you in future videos. Have a great day.